Okay folks, in this video we'll quickly review what we consider unusually high volumes in recent Springworks Therapeutics call option trading and then speculate what a hypothetical Springworks valuation might be in a theoretical near-term M&A transaction based on recent peer acquisitions if these investors know something we do not. To be crystal clear, this is for entertainment purposes only. This is not investment advice. We have no idea if Springworks is for sale nor otherwise what will happen to Springworks share price in the future. More important, we own lots of Springworks stock and therefore have every ulterior motive to see its shares trade higher. Let's start with one example of the unusual stock option trading we've noticed. On the morning of February 13, 2024 at 9:45 a.m., while Springworks was down about $1 from the prior day at roughly $45 a share, and incidentally also while the Nasdaq and XBI were down 2 and 3% respectively after the CPI data was published before the open, someone purchased 1,162 Springworks $55 call option contracts expiring in 4.5 weeks or on March 16, 2024. Now yes, the Nasdaq and XBI have since recovered, as has Springworks stock, but there was no way to know that at the time. Also, we understand this was, most likely, not a purchase in the open market but you get out point. At $3.80 paid per call for 116,200 options, this investor risked $441,000 on this trade. This investor loses his or her or its entire investment if Springworks share price does not increase by at least $10 to $55 a share, or by about 22% between then and March 16, 2024. For this investor to then just break even, take the $55 strike price and add the $3.80 per call he or she paid and you see Springworks needs to get to $58.80 per share. This is an increase of $13.80. Or 31% in the next 4.5 weeks just to break even. That seems an awfully risky bet on a stock that has already more than doubled over the last 2.5 months since OXIVIO was approved by the FDA around last Thanksgiving. You're looking at Springworks share price via graph since November 27, 2023. Visually, here is what the stock needs to do to break even from here. Hey folks, if this was the only recent aggressive trade, we'd think nothing of it. Now we know little about stock option trading strategies. In fact, we've never made money buying stock options and once read 85 to 90% of all stock options expire worthless. So you understand the scale. Here is a list of every Springworks call option purchase where the investor risked over $100,000 per trade over the last 30 days. Column AAE is the date of the trade, column B is the option strike price, column C is the expiration date and column D is the number of contracts purchased. Column E is the underlying shares as each contract represents 100 shares. Column F is the amounts paid per share with column G noting the total amounts invested. The last column to the right, or column H, is the break-even price. We've followed Springworks for years and have never seen trading volumes like this. Of course this may be the new normal now that OXIVIO is FDA approved. What do we know? We only suggest you look and then decide for yourself. As a post-edit note, on Valentine's Day an investor wrote a check $1.26 million to purchase 2,050 calls, or 200,000 shares, expiring in June 2024 for $6.30 per call. My goodness, that is a lot of money. Okay, so what could Springworks be worth if it is, in fact, about to be acquired as one might believe the recent aggressive stock option trading suggests? Well, to be clear, we have no idea. However, we can compare Springworks valuation-related data points to a recent peer M&A transaction and guess. Let's pick Immunogen as a peer transaction. We are not at all suggesting Immunogen is an appropriate Springworks peer, but it is the most recent sale of a commercial-stage oncology-focused biopharma where data is available. Here is a literal snapshot of Immunogen's financial forecast per their 14D filing. Here are Immunogen's revenue forecasts by year and here is their gross margin forecast by year in Excel so it's easier to read. Dividing gross margin in this line by total sales above yields these gross margin percentages. Again, this is not our data. This forecast comes directly from Immunogen management. You can verify all of this for yourself. Let's first note Immunogen's fiscal year 2028 revenue forecast of $1.221 billion. I wonder, wait, hold on a minute, look at this. For Seeking Alpha 2 analysts provide Springworks 2028 revenue estimates of $1.3 billion and $1.8 billion. The quote-unquote consensus of the two is $1.55 billion. Interesting, these two analysts believe Springworks will do more in 2028 revenues than Immunogen. Yes, it's only two analysts. Let's also point out that between 2024 and 2027, analysts expect Springworks to do collectively $1.5 billion less in revenues than Immunogen. Here is Immunogen through 2027 and here are Springworks analyst estimates through 2027. These are the differences by year. Add the differences up and you get just under $1.5 billion. If Springworks analysts are right, Springworks will do a collective $1.5 billion less in sales over the next 4 years. That is a truly meaningful difference near term which, we suspect, is material to valuation at least dollar for dollar. Unfortunately, we do not have Springworks analyst revenue estimates after fiscal year 2028. Now let's graph Immunogen out to 2040. Notice Immunogen forecasts $1.654 billion in 2032 revenues. Now Springworks is blank after 2028 but, at this link, we see Corinne Jenkins of Goldman Sachs forecasts $800 million in 2032 OXIVIO sales and, at this link, $810 million in Renew sales. You see it here for yourself. Here are the links. In total, Corinne Jenkins from Goldman Sachs is at $1.61 billion in Springworks 2032 revenues. That's a hair less than Immunogen. Just a reminder, Springworks Renew is not FDA approved yet. Next, Bank of America analyst Alex Stranahan forecasts Renew, by itself, with peak sales at $1.5 billion a year. My goodness, that is a big number. Unfortunately, Mr. Stranahan does not provide the specific year he expects Renew sales to hit $1.5 billion, but perhaps it is safe to assume 10 years from an anticipated FDA and EU approval in 2025. For fun, let's assume the $1.5 billion hits by the year 2035 and note the Renew estimate on the graph accordingly. We know Springworks CEO just said, at the Guggenheim investor conference last week, that Oxivio could do $1 billion a year at peak, but he also did not provide a specific year. Let's also assume by the year 2035 as well. That would be $2.5 billion in collective quote-unquote peak sales in 2035 between the two products if both are right. Wow, that is awfully close to Immunogen's 2035 revenue forecast of $2.6 billion. Now let's connect Springworks consensus fiscal year 2028 revenue estimates of $1.55 billion to Goldman Sachs' $1.61 billion estimate in 2032. If these 2028 and 2032 estimates are close, and if we assume 2% annual sales growth after the year 2032 reflecting price increases, you see 2041 estimates at just over $2 billion. Again, we just noted the two peak sales estimates collectively at $2.5 billion. Back to the graph. If we instead connect the two Springworks analyst estimates in 2028 to the $2.5 billion in peak sales in 2035, one senses Springworks revenue potential is, more or less, on par with Immunogen after fiscal year 2027. Is it reasonable to believe that, absent 2024 to 2027, Springworks could generate the same revenues, and hence be worth more or less the same as Immunogen, again except for the $1.5 billion difference between 2024 and 2027? It is a question, not a statement. However, if this profile is even close, it demonstrates Springworks may, and please we say the word 1,000 times, may, offer the same revenue potential as Immunogen. We do not have the expertise to offer an opinion, we are only connecting dots to third parties who may, again may, be qualified. Next, notice Immunogen forecasts their revenues to peak in the year 2036 and drop thereafter. While we cannot confirm Immunogen's patents expire in 2036, it's our experience sales fall after patent expiration. For Springworks, we know Oxivio is patented through the year 2042 and Renew is patented through at least 2041. Yes, Springworks says Renew is patented through the year 2043, but we could not find a third-party source to verify, which is why we use 2041. Now it should be noted that when one does net present values on revenues forecast out so many years away, the net present value is not as much as would seem, but hey, it is still a data point to consider. Let's remember both Springworks products are pills and hence should have gross manufacturing margins, more or less, consistent with Immunogen. So at this point what do we know? We know Immunogen got $9.6 billion in enterprise value when acquired, that was $10.1 billion paid in total less the $500 million Immunogen had in cash to get the $9.6 billion enterprise value. Immunogen got $9.6 billion in enterprise value for this revenue and gross margin forecast. We know, even if Springworks meets analyst revenue estimates through the end of fiscal year 2028, Springworks would generate $1.5 billion less in revenue between 2024 and 2027. Hence, absolute best case scenario, assuming a Springworks buyer finds these Springworks revenue estimates, that more or less approximate Immunogen's forecasts after fiscal year 2028, credible, and then also assuming a Springworks buyer would be willing to pay revenue multiples just like Immunogen, Springworks would get roughly $1.5 billion less than Immunogen or roughly $8.1 billion in enterprise value. Hey, it may be a stretch, but remember this is just for entertainment purposes. Call it dreaming. In such an absolute best case scenario, add Springworks roughly $650 million in cash and divide by 87 million fully diluted shares to get a share price. We're not going to do that here because it is an awfully big number that we suspect will later prove to be so aggressive it becomes embarrassing to us. But hey, use it if you believe it is possible. Next we're going to do some simple NPV calculations on anticipated gross margins. Here are the gross margins forecast by Immunogen by year directly from their 14D filing. Here they are by year. FY24Y1 means fiscal year 2024 and year 1 from the date the acquisition was announced. FY25Y2 means fiscal year 2025 and year 2 from the date the acquisition was announced, and so on and so on. Again, the enterprise value was $9.6 billion. Using half-year conventions, and yes excluding a terminal value, we see using a discount rate of 12.025% on these collective gross margins by year through 204 results in the net present value of $9.6 billion. To recheck for yourself, let's look at fiscal year 2031 as an example. FY31Y8 means fiscal year 2031 and year 8 from the date the acquisition was announced. You see Immunogen forecast exactly 1.393 in gross margin in the year 2031. Using a half-year convention, this is 7.5 years in our NPV calculation. The present value factor of $1 7.5 years from now at a 12.205% discount rate is 42.7%, so multiply the 1.393 in 2031 gross margin by 42.7% is worth $594 million today. Again, the $9.6 billion is the summation of all future gross margin at a discount rate of 12.025%. Let's do the exact same for Springworks. Using the same revenue assumptions from our previous exercise as shown here, that only gets to just over $2 billion by 2041. We will assume a 96% gross margin rate yielding this hypothetical Springworks gross margin forecast by year through patent expiration in 2041. Using the same 12.025% discount rate, which yes is very aggressive, yields a Springworks net present value of, wow look at that, $8.4 billion. However, considering Renew is not FDA approved, it is much more likely an acquirer would use a higher discount rate because the risk is higher. Using a 15% discount rate on the subject hypothetical Springworks gross margin forecast would yield a net present value of $6.75 billion. That feels more reasonable. Add $650 million in Springworks cash to get a hypothetical Springworks market cap in a theoretical M&A transaction at $7.4 billion. Look folks, if these third-party analyst revenue forecasts are credible, then it is possible. We showed you the math. Just remember Mirati analyst forecasts were 50% higher than the forecasts prepared by Mirati management. The Springworks analyst estimates may be grossly inaccurate for all we really know. This is why this entire video is hypothetical for entertainment purposes only. As another sniff test, let's take the range of 5-year revenue multiples paid in peer M&A transactions as identified by Immunogen's bankers, Lazard, and reflected in Immunogen's 14A filing. UC Lazard said they reviewed these peer M&A transactions and said a mean, or average, Year 5 revenue multiple was 4.2x. They said a 5-year revenue multiple of 4.9x was in the 75th percentile. Hence, to get a range of hypothetical Springworks valuations, let's use the low Springworks 2028 analyst revenue estimate of $1.3 billion and multiply that by the 4.9 year 5 revenue multiple. Should a buyer deem Springworks worth a multiple in the 75th percentile of its peer group, and you get $6.37 billion in enterprise value, add the $650 million in cash and you get a roughly $7 billion hypothetical market cap in a theoretical M&A transaction. You could also use 2028 analyst consensus revenue estimates of $1.55 billion multiplied by the average peer year 5 multiple of 4.2 and you get $6.51 billion in enterprise value. That'd be just over $7 billion in market cap. At the end of the day, if Springworks is even for sale, then it is for sale with minimal revenue history. While every M&A transaction is different, it is our experience a credible revenue forecast is overwhelmingly the most important for valuation. For those who point out the Renew NDA has yet to be submitted, we'd point out Morphosis was just acquired while preparing a major NDA submission. Bristol Myers acquired Karuna that had an active PDUFA date. Bristol also acquired Myocardia before its FDA submission. All the same, maybe a Springworks buyer would rather wait until Springworks NDA submission has at least been accepted for review. Again, we have no idea. We're only pointing out the call option trading may suggest otherwise. We will also add we once thought the same thing about Urogen, ticker symbol URGN. Urogen trading suggested a buyout was imminent. We were dead wrong and lost a ton of money. This is of course all hypothetical, which is why all of this is for entertainment purposes only. This is not investment advice. Well, we hope you enjoyed our video. Please take a moment to follow us. Thank you.